Well, now this is exciting. Guys, in this video, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what I would expect to happen next. As we get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you have not already joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. If you're looking for a little bit more from the crypto space, everything from bear market strategies through to project reviews and trading, then why not go ahead and check out the Patreon services as well, just in the description below. Okay guys, let's get into this. So as I was talking about in the last few days, we were basically talking about several different levels, right? 36k, we lose 36, we go to 34, lose 34, we go to 28, lose 28, we're going to 23. We've obviously lost 28, so 23 is this next expected area to come down to. This is our low C wave. Now I'm going to walk through a little bit of the structure of this first, and then I'm going to kind of go through some of the other kind of data that you must absolutely see. Okay, so I'm just going to scroll up probably to the 8 hour just to make this a little bit easier to see. But basically we have this corrective pattern here taking us down. This now corrective phase is now an expanding flat. Okay, so what we actually end up with is a large pullback here. This has been our A wave. This is basically from 65k down to our low point of about 28k. We then move on up to the $69,000 high, and then we're going to pull back down lower than the A wave, basically a big expanding flat. Now, if we take a look at the subwave of the C wave coming down, we actually have an A, B, and C, and you can see that this is pretty straightforward. If we're going for a 1-to-1 ratio, what we're looking for is to come down to 23k. Now, what I was hoping for, this would be a running flat, which would have ended down here at 32. We did call the 48, but obviously losing these areas on the way down does mean that we're coming down much lower. Okay, so let's go ahead and measure this out. So let me actually just zoom in ever so slightly. What I'm going to do is I'm going to put a fib from this low level to this high level. Okay, so we're just going to grab that. We're just going to take the low, and then we're going to go ahead and take the high, if I can get that. There we go. And then I'm going to move it over to our high point just here. Okay, this then shows us moving down to 22,967. $23,000. Okay, and that is the area that we are targeting. So what I will do is I'm going to go ahead and put a horizontal line right in here, and at the same time I'm actually now going to remove some of these old lines because I don't think they are relevant right now, so we'll just get rid of those. Perfect. We'll just get, if I can, yeah, we go. Perfect. Okay, so we end up with this one down here. Now what I'm going to do is I'm also going to just put a price label on this so you can kind of see exactly what I'm looking at here, and it's basically 22,967. So I'll just go ahead and change that to 967. Just grab that 67, so we have that on the dollar. Perfect. Okay, so we have this little yellow box area down here. This symbolizes this gap that was left behind. This is why many people in the space have been calling for $20,000 Bitcoin. Essentially, basically in traditional finance, these gaps historically get filled. Now, they don't always get filled, so there's a high probability when it comes to the stock market that these gaps get filled. However, in the crypto space, you know, it's kind of the wild west. Anything goes. If you expect something to happen, it probably won't happen. The opposite would normally happen. So just be aware that although this is the gap, this is the reason that many people talk about $20,000. It's all to do with this little gap right here, and it really doesn't mean terribly too much. But just be aware that there is, in traditional finance, these gaps could get filled, and it's possible here that we pull back down into that low gap there. It would completely break the history of Bitcoin though, because it's never happened before. But again, you know, history isn't always going to repeat itself. Okay, so just keep that in the back of your heads. All of this is a corrective phase. However, we can of course articulate this as a bearish phase if you want, or a bear market, however you feel most comfortable. But essentially this is corrective pattern, and after this I would expect a pretty good swing up going high. Now this would mark a 66% pullback, and obviously bear markets historically go down for Bitcoin an average of 85%. So if we were to drop down 85%, you're talking about $10,000 BTC. Now $10,000 BTC would completely destroy Bitcoin's history, because it would basically mean that we'd be doing things that haven't happened before in the entirety of Bitcoin history, right? And so just kind of keep that in the back of your head. This might not be pulling down that low, okay? The market, I don't think, is going to allow you to go down as low as what we had done previously. Much more mature than it was previously, although still immature on the grand scale of things. So just keep this in the back of your head. You know, when we were pulling down 86 or 84%, in 2013 and 2017 retrospectively, those pullbacks, we were a very, very small amount of money in the space, right? That has ballooned up quite a bit. It is still small on the grand scheme. However, it is going to be harder to see those levels of pullbacks with this much more adoption year, or bull run on bull run, if you will. Okay, so just kind of keep that in the back of your head. History will not always repeat itself. I think we have got different variables this time around, and I've spoken about this before as well. But right now, $23,000 is the most probable area, as you can see this ABC structure coming down. Now, what else is in here? Well, this is looking like, if we come up to here, we have some kind of three wave, and I reckon this is going to be a 5-wave move. So that basically makes the entire correction a 3, 3, 5. Okay, so pretty standard stuff, nothing too unusual, right? And if we go ahead and grab the 5-wave move here, what we can do is we can now say that here's probably wave 1. We've got 5 subwaves there. We have our 3 subwave, wave 2. This is going to be our wave 3. We should bounce up, and then we should come down into the final 5th wave. Okay, so you end up with that move there. And of course, you have your subwave counts as well. You go 1, 2, 3, 4, and 5. Okay, and again, up here, you can go 1. Oh, if I actually grab the right thing, there we go. You go 1, 2, 3. Actually, no, that's a bit long. Let me just pull that back in. We go 1, 2, 3, 4, 5 right there. Okay, so 5, 3, 5. We look for 3. We look for 5. Okay, so wave 4s are normally complex. Or well, wave 2 or wave 4. One of them is going to be simple. One of them is going to be complex. Now, because we had a very simple wave 2 here, this should be a complex wave 4. And we don't really know where this is going to retrace up to. It can be reasonably big retracements, but it's not normally as big as wave 2. But considering how shallow wave 2 was here, as in it wasn't a deep retracement, it could be that wave 4 is actually quite deep. So it's going to be a little bit cautious under these structures. But essentially, if I were to take the entirety of this wave 3 move right here, our retracement for this is probably going to be up to about $31,000, maybe $32,000. Okay, so just keep that in the back of our heads there as well. And if we measure from the low down here, if I measure from the low here to approximately that point, then we are talking about maybe coming down to that $23,000 on that slightly higher. So it might have to come down up here ever so slightly towards that $33,000, but we'll have to just keep a close eye on that, see where it goes, where we find the resistance, and how we're going to see that measure out. But essentially, yeah, that's kind of what I'm thinking here, or it should be some kind of 3-wave bounce moving up. Now, if I just zoom in here for a sec, just bring back the stochastic RSI, you can see that we are looking for a bounce on our hourly chart, so we should be looking for some kind of movement to the upside. The 4-hourly still got to come down though. The 8-hourly still has to come down. The daily's already oversold, the weekly's oversold, the monthly's oversold. So the larger time frames are oversold. I'm ready for some kind of move to the upside after this $23,000 move. But we've got the 4-hour and the 8-hour that are still looking for corrective plays. So it could be that actually we now move up a little bit into a 4th wave high, and then we basically bring down the 8, the 4, and the hourly charts again in this last little 5th wave coming down lower towards $23,000. Okay, so my expectation here is we basically want to be monitoring a kind of 4th wave going up, some kind of ABC structure. But again, it could be complex in the way that it actually gets created. So we just want to be open to the idea that we end up with a reasonable amount of I guess of a bounce, but nothing too major, and then obviously finishing off that final move to the low side here, taking us to $23,000. Okay, once this is done though, I would expect to see structure starting to form to the upside, and what I would like to see is more bull signals at this point, considering the amount that we've actually retraced down already. Okay, obviously if we don't see that, then we'll probably push back up, and we could potentially pull back down, going down even lower. Okay, so we want to be very, very cautious at this point. Specifically if we are not in the hodl mentality, because right now I do think that there's many altcoins in the space that are well below 80% of their all-time high, and dollar cost averaging into those slowly over a period of time makes a lot of sense. If, however, we've got some serious cash that we want to throw at the market, we don't want to necessarily just dollar cost average from an 80% drop. What we really want to do is we want to see confirmation of reversal and actually buy the upward swing. So there's different strategies depending on the different types of investors, right? So join us in Discord. Chris is obviously doing the dollar cost average approach to this. This is one that we talk about often on the channel, and I'm taking a slightly different strategy where I'm actually looking for the point of reversal and trying to buy the upswing, and therefore we can actually be confident in the market reversal and the bottom being in. I'm not trying to get the bottom, I'm trying to find the bottom. I want the bottom to come in, I want the bottom to disappear, and I want confirmation that we're out of it before, you know, we throw big money into the market. So different strategies and all that kind of stuff. Join us in Discord if you want to learn a little bit more about the strategies and things like that we do, obviously via the Patreon services. So you know, for Bitcoin here, that's kind of what I'm looking at right now. The wave counts are indicating $23,000 after losing the $28,000 low points, and again, you can take a look at why this is the case. There's a lot of support to be found in this area, even a little bit lower, just at about 21.7. So again, you could just overwick that. It's also fine. You know, it's also possible that you come down and do things that have never been done in Bitcoin history. Losing the previous $20,000, for example, would be very, very interesting. But the buying pressure down at these low areas is very, very high. So we should be very aware that once it gets here, it isn't going to be around here for too long, in my opinion. There's a lot of buy orders, you know, anywhere between kind of $26,000 and $20,000. The buying pressure in this area is very, very high. So the likelihood of staying in this range is not going to be there for very long, in my opinion. And then we should start to see structure moving on out of here. Whether that structure is corrective or whether that structure is going to be impulsive is yet to be known, but that's what we're waiting for. We're waiting for that kind of confirmation of reversal. And as I said at the beginning of the video, you know, I don't think we're going to see the same levels of retracement that we have seen previously, considering how more mature the market is, considering the structure that Bitcoin is in right now, and the fact that we still have to have this fifth wave higher, and the structure that comes up here next, taking it into between this higher zone, is absolutely going to be key in seeing this entire structure finish before we come down into a bear market. Okay, so you know, we can articulate this as a bear market, absolutely, but I still expect us to pull up and finish this fifth wave high. It is possible, of course, that we have these other areas kind of chalking up as the fifth wave. I just think that's incredibly unlikely, but it is possible with some kind of leading or ending diagonal kind of pattern and things like that. But anyway, nonetheless, I'm not going to ramble on. If you found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.